And you made it very clear that this is a statement that you truly believe. But to what extent are the markets not random?
Well, to the extent that they're not random in a couple of ways, and this goes into the whole whole controversy, which has been going on for decades, between those who believe in the efficient market hypothesis and those who don't. The latter being, at least in serious academia, being behavioral economists. But of course, originally and now as well, the whole sorts of people in a trading community. Now, I felt from the beginning that concept was wrong for many reasons, but two big conceptual reasons. One is I just knew too many people who had obvious trading skill. And it wasn't just they were lucky, they just did too many trades for too long and had results that were too lopsided to be explained in a probabilistic sense that, if you have enough traders, some will get those results. No, I don't care how many, you can have 10 billion traders, you're not going to get those results, So clearly something is going on here where people are getting types of track records that from a simple probability calculation would be impossible if the markets were random. And that's one of the arguments I always have against the efficient market hypothesis. The second thing is, and this big, which in both of these are big areas and there's kind of sub parts to them, but the second big concept of why I think people are wrong when they believe the markets are efficient is because prices, very often there's circumstances where clearly the market price is not right. I mean, there's just tons of examples where you can show that to be the case. And there's by no stretch of the imagination can you say the market price is right. So I'll give you, in fact, I wrote a book, my next to last book, and it was a non-market wizard book called Market Sense and Nonsense. And in Market Sense and Nonsense, which I go through a whole bunch of, each chapter deals with a different set of, different subject of misconceptions. One long chapter, probably I think the longest chapter in the book is debunking the efficient market hypothesis. And one of the things I do in there is I give a number of examples of just come on, in no sane world could this happen if the markets were efficient. And there's a lot of examples. So let's just go, let me take one. I mean, there's so many. So let's say take something like Countrywide. Countrywide, if you had to pick a company that was the worst of the worst, I mean, I don't know who I would pick, in this whole 2008 financial meltdown.